Hey, everybody, we have an insanely awesome crypto roundtable. You're not going to believe it. Back with us again, Sunny Madra and Vinny Lingham. So many stories on the docket. Let them know what's coming up, Molly.
It is outstanding. We're going to start with, it feels like an hour and 45 minutes ago, which it was, the Do Kwon arrest warrant in South Korea, the state of crypto scams, and what it's going to mean for the future as the bad guys wash out.
And we talk about the OrangeDAO. This is a distributed autonomous organization. Basically, it's a venture fund combined with a group of 1,300 YC alumni trying to figure out how to front run the market. Really good idea. But devil's in the details, so we kind of break it down and try to figure out what it is.
And everybody, welcome to my nightmare, which is Bitcoin energy usage. The merge is happening. The ETH merge going to drop electricity usage and ETH mining by 99%. So we're going to go through some of the energy consumption stats in the crypto world and have a bit of a spicy convo.
And we're going to kick off today's show with the final version of the blueprint where I go through the 7 stages of wealth creation. This is going to be a great show.
Stick with us.
This Week in Startups is brought to you by Visa. Are you a small business owner? Did you know that Visa's online small business hub has tools, discounts, and resources to help you run your business? Learn more at visa.com/smallbusinesshub. Brave is an internet privacy company on a mission to protect your personal info online. Download Brave today at brave.com/twist to browse faster, search privately, and so much more. All in a single click. And OpenPhone. As a startup founder, a lot of mistakes are easy to roll back, but using your personal cell phone number as your company number isn't one of them. OpenPhone makes it easy to get business phone numbers for you and your team, right on top of your existing devices. Visit openphone.com/twist to get 20% off your first 6 months.
Okay, everybody, it's episode 10 of The Blueprint. What an amazing series this has turned out to be. We just did it as a little idea because, well, people ask me for career advice all the time, and it gets a little repetitive. And being able to do this series means I can send people to thisweekinstartups.com/The Blueprint and let them get a little bit of career advice. Again, it's not just from my career. Some of it is. It's also from investing in startups and watching other folks on their career journeys and being friends with folks who I've seen become very successful. I want to just have a discussion about money and wealth. Very uncomfortable topic. And people want to get rich. People want to have financial security. That's amazing. There's a bunch of studies out there. A lot of them say in the modern world, in the Western world, if you make over $70,000, $80,000 a year, the pressure from money goes way down. You don't have this existential crisis. Oh my God, I'm going to run out of money. Now, if you live in San Francisco, that's going to seem like a joke. If you live in Nashville, it's going to ring true, right? There's different places in the world with different costs of living. I recognize that. I think I read a crazy statistic that New York apartments were up to $4,000 or $5,000 a month each. So obviously that this general rule of the $70,000, $80,000 a year salary does not apply. But there is a baseline, depending on where you live, where you feel comfortable and the stress goes down. Now, if you're an ambitious person, the stress never goes away. It's never going to be enough. You're never going to be content. This series is not meant to be your therapy. I don't know what trauma you got. I don't know what drives you. I'm just trying to give you some facts in terms of how to become successful in your career. There is a little hierarchy of how money is made in the world. And I've really given this thought over time because I'm actually writing a book about money. That'll be my second book coming out in 2023, hopefully, if I get it done. And one of the things people want to know is, how does money come into my bank account? And you just have to think through first principles about this. How does money get into your bank account? That's a question everybody wants to know. Well, there's a pretty obvious one. You can get a salary. That is kind of like the first level of making money. You could make an hourly salary. You could drive Uber. You could work at Starbucks. You could get a job out of school, whatever it is, a salary. You do work, you get paid. Okay, great. Pretty straightforward. And you can optimize for your salary, but there's kind of some limits here, right? There's caps. People are only going to spend a certain amount on a person's salary. If we were talking about a sales executive, some incredible sales executive in SaaS has an amazing book of business. They work at Salesforce or NetSuite or wherever. They have this incredible $150,000 base salary. They're making $150,000 in commissions. It's incredible. $300,000, or you're the VP of engineering and you're at a startup that's raised its Series B and you're getting paid $200,000, $250,000. Congratulations. You're starting to hit that upper bound of salaries. You can even see the upper bound of salaries. You look at public companies and see what they compensate the top 5 or 6 people. And you'll see a salary line. But then there's the commission line, which comes next, or bonus. Commission bonus, similar but different. A bonus kind of goes with salary. You consider your salary plus bonus. A lot of places, if they're doing well, if they're profitable, will give 2 weeks of salary as a bonus at the end of the year. 2 weeks of salary out of 50, you double it to get the percentages. You can count on 2, 4, 5% of your salary. So you make $100,000, you get a $5K bonus. It's nice. Takes the edge off Christmas. Maybe you get to go on a little vacation. The second way is commissions. So you got your salary, now comes commissions. We talked about that sales executive before. What that means is somebody says, okay, you sell $1 million, we'll give you 5% of that, you make $50K. And of course, if you want to work twice as hard and or you're 2 times more efficient than the average salesperson, you can get to $2 million in sales and make $100,000 in commissions. So that's nice when you get a commission for something, right? It uncaps your ability to make money in one way, but if you're a good founder or you're a good manager, you're going to reset the commission structure every year. You're going to say, hey, last year you did 2 million in sales. This year your target's 3 million. Last year we paid you 5% on the 2 million, made 100K. This year we're going to go for 3. We're going to give you 4% on the first million, 5% on the next million, and 7% on the third million, right? They kind of create an incentive structure for you. So the commissions will be looked at. And if somebody starts making too much in commissions, the boss or the owner of the business or whoever's in charge, if it's a big company, might say, you know what? This person's crushing it too much. We're going to get rid of them. We're going to cut them. And we're going to have 3, young guns come in and reset the salary structure. And you see that on a TV show like this new one, Industry, where somebody's got this book of business. They've been printing money for the company for too long. And they're just like, yeah, these young people can do it for less money. So again, salary and commissions, you can make money, but there's going to be some ceilings and people might tweak it. Because if you demand too much salary, somebody might just say, listen, I can hire 2 people for that cost. I can hire 3 people for that cost. See, you can't push people too hard or else they will replace you, which you would expect them to. And we talked about that earlier in this series, The Blueprint, in terms of just testing your market. And the way to test the market is to just look at consulting revenue, which is the third level here of 7 that I've identified in terms of making money. If you have other ones that I'm missing here, jason@calicanis.com. Love to hear your feedback if they don't fit into one of these 7 buckets. Consulting revenue is you say, hey, pay me $100 an hour and I will do UX design for you. And then you sell out your time. You sell out your 2,000 hours you want to work a year at $100 each. You make $200,000. You were working in a 75K position, 100K position, 125K position. You went consulting. Yeah, there's more expenses. You have to do your own taxes. You have to withhold. You have to pay for your benefits. You have to find customers. There's all this other nonsense and stress that comes with it that would be abstracted from working in an organization. But you could uncap where you could do the next sort of level up in uncapping your pricing. So if you become somebody who's known as a genius in UX and you did this incredible UX design for Robinhood, maybe somebody will pay you $500 an hour and they'll hire you for 100 hours and you have a $50,000 job that you can do in 3 weeks. And you're like, wow, this is incredible. But you earned it, right? You made Robinhood and Calm. You've done 2 of the great apps of all time in terms of UX design. I happen to be investors in both of those. I don't know, top of mind came to me. So that's where consulting revenue can start to also, you can see what the market will bear. If you charge too much, you say, I want $5,000 an hour. Well, you better be making, Steve Jobs' logo for Next, right? I think he famously spent $50,000 or $100,000 on that logo. It was worth it. And that was a long time ago. That'd be equivalent to spending $500,000 now, probably, or $250,000. But he felt it was worth it. He's Steve Jobs. He's got the money. Why not? Okay, 4th on the list, stock options. We all know what these are. You work at a startup, you get some options. You got lottery tickets. They were priced in some 409A at 10 cents each. Company went to $1 while you were there. Then they got their Series B. They went to $5. All of a sudden, they went public at $20. You're sitting on 10-cent options. The stock's trading at $20.10, let's say, for ease of math. You made a $20 profit for each share you got, and they gave you, 10,000 shares, right? So you made $200,000. Fantastic. Stock options. And also in commissions, in stock options, you would put carry at a venture firm. You could debate that, but they're kind of different than commissions because those are capped at a certain percentage. Stock options and carry would be number 4. So if you're lucky enough, my Lord, to get carry in a venture firm or to get stock options and they work out, there's like the most accessible lottery ticket, uncapped. This is now when you're starting to get into an uncapped place, right? The thing becomes Uber, Apple, Tesla, whatever it is. My Lord, that's when true wealth can come into your bank account. Salary and commissions, you can get wealthy. Consulting revenue, yeah, you can get wealthy. Stock options and carry, okay, now we're talking about uncapped. So 1, 2, 3, kind of capped. 4, now we're uncapped. We're in the uncapped category of wealth creation. Number 5, creating IP and getting royalties for it. Okay, what does this mean? Okay, you wrote a book, you're Stephen King. You created this incredible series of characters. And you made the book Cujo or Carrie or whatever it happens to be, and somebody wants to license it. They want to option it. Okay, you wrote the book. Some publisher has the rights to the book for 20 years. Somebody else wants the paperback. They get the rights to that. Somebody wants to make it into a comic book. You sell the rights to that. Okay, now somebody wants to make a TV show. You sell it. Somebody wants to make a movie. You sell it. And that's why there are people who collect IP and want to own 100% of it, like Disney did. Shout out Bob Iger, Marvel, Pixar, Star Wars. They own all of it. They don't have to pay a licensing fee. But previous to that, when Marvel was independent or George Lucas was independent, ching, 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 every time somebody wants to use a Marvel character, they cash at the register, boom, give us some money. Every time you want to do something for Star Wars, you want to do a Christmas special, you want to do a new action figure, you want to do something at McDonald's, yes, I will take a royalty. I will sell you, license you my IP. And what do you need to create that and have that uncapped upside where you can keep monetizing your IP? Well, you need to be creative as heck. You need to be a virtuoso. You need to be so good at what you do that you can get that money in and that people want your IP so much. It's very rarefied air. Of the, million people who are going to hear this video, I would say maybe 5% of you are going to be able to do this. You're that talented enough. That's not a dig to anybody else. It's just that IP is a bit of a race, right? And so if you're watching Star Wars, you can't be watching Star Trek. And if you're watching Star Trek and Star Wars, you can't be watching Game of Thrones. There's a certain limited number of hours in consumption. And that's why, the 100,000th horror novel makes no money. The 10,000th makes maybe a little bit of trickle. And the top 1,000 make 90% of the revenue. And the top 10 or top 5 may make 50% of the revenue. This is a power law type situation, just like venture capital. So if you're Michael Crichton and you created Jurassic Park, my Lord, that IP giveth forever, which is why Universal wanted it so badly, and I think they own it. Are you a small business owner? Did you know that Visa's online small business hub has tools, discounts, and resources to help you run your business? So whether you're a business beginner or an entrepreneurial expert, find the solutions, tools, and tips you need to help take your business to the next level. Plus, if you have a Visa business credit card or debit card, you can get access to cardholder benefits like Visa Savings Edge, a savings program which can help you save on everyday business expenses like office essentials, travel, and more. When you enroll your Visa business card in Visa Savings Edge, you'll have access to valuable offers, which can help turn qualifying business purchases made with your enrolled Visa business card into savings for your business. Learn more at visa.com/smallbusinesshub. Once again, that's visa.com/smallbusinesshub. Visa, a network working for everyone. Okay, now we get to number 6. This is, again, a very niche thing, but it also has relatively uncapped upside. If you're a deal maker and you can buy a company like a private equity person can, or a banker, or somebody who's a deal maker like Michael Ovitz at CAA, shout out, talking about Jurassic Park. He was able to broker deals. And when he brokered those deals, he was able to capture some commission. He was able to capture some IP, some licensing for all time to come. So those deal makers, they don't exist in the world that often. But when they do, they can get paid forever. In fact, I think CAA wound up having some kickers, and I read this in one of the books, for Jurassic Park itself, another example of IP created by Michael Crichton, exploited by Spielberg in the form of the movie, and then exploited in the theme parks and sequels, series. My kids watch an animated series now. There's Legos. You get the idea. Well, somebody brokered that deal. And that was Michael Ovitz. He got Spielberg, he got Michael Crichton, he got Universal, he got them all together. And those people can, as orchestrating those deals, 1 + 1 equals 3, and they get a major fee. Finally, at the pinnacle of wealth creation is the founder. The founder says, this deserves to exist in the world. I am going to start This Week in Startups, All In Podcast, Inside.com, Calm.com, Uber. I want to manifest a new thing in the world. 99 times out of 100, it does not work. But the one time when it does, if it does provide value, oh my Lord, the person who founded it and created it, they get a special amount of credit and uncapped upside, i.e. Michael Crichton, George Lucas. We can do it in entertainment. We could do it with McDonald's. You can go watch the movie, The Founder, and you can see it's a great performance by Michael Keaton, by the way, and a great song, Boom Like That by Mark Knopfler of Dire Straits fame, one of his great solo tracks, Boom Like That. And if you watch The Founder, you'll see there were founders of McDonald's, but this other broker guy came in, Ray Kroc. He said, I'll license the brand from you. Give me the McDonald's name. And then he went out and licensed it. He owned it. They kept the 2 original stores. He paid them a small royalty. Then he bought them out and owned all of it. And like Disney now owning Marvel and owning all the characters, I think they've swept them all up except for Spider-Man. They get to exploit them for all time. Ray Kroc did that. He was the broker-dealer in number 6 who came in and then became the founder. In fact, his autobiography is The Founder. That's how it works, folks. Now, if you want to jump the line, you could just start a company. That works for some people. What I suggest is you look at this list of 7, the big 7, and you start working your way down the numbers. Yeah, you get a salary. That's nothing wrong with that. That's how I started. Get some commissions. I had some commission revenue in my life. I was never a sales executive, but we had some commission structures for landing new clients at some companies I was in. I was a consultant. I did do consulting with people, and I got paid hourly. And then I never had stock options because I started creating stuff. And so I very quickly, got to creating IP and magazines and stuff like that. I never brokered deals, although venture capitalists could be considered in that area of brokering deals, deal maker, some way, capital allocator, and getting a commission, a carry for that. So you can, when I say number 6 is brokering deals and commissions, venture capital falls into that. And of course, founders. Those last 3, 5, 6, and 7 are where generational wealth is created. The first 3, that's not going to be generational wealth. That's going to be a great lifestyle for you, a great wealth for you. When you start making over $100,000 a year, you start getting to $150,000 a year as a young person in today's dollars. 2022 is when this was recorded. You're going to be in good shape. You're going to be in really good shape. You put $10K away a year, invest. Amazing if you can get to that level. It's really hard to get there. Most of your contemporaries, unless you're some rich kid listening to this from a trust fund, a lot of your contemporaries are never even going to get to that level where, they get through that 1 through 4 even. They're making money. They get a great salary. Maybe they can get great consulting revenue and they get some stock options. Very rare to even get to that 4th level. If you can get to the 4th level of this stack, then you're starting to create generational wealth. You may leave something for your kids. Stock options and carry, that's when it starts to kick in. And it's really great if you can do that without having to take the risk of being number 7, the founder, because now you're putting it all on the line and you're going to suffer and you get pain and stress. Not everybody's built for it. So 4 is like a really great sweet spot. And then after that, when you're in that sweet spot and you get ahead, it can make you dangerous. You can put a little cash in your account and then you can do anything. So I hope this is helpful for you. This is the wealth creation stack 1 through 7. And this is the final episode of The Blueprint. Go to thisweekinstartups.com/The Blueprint to watch all 10 episodes. And I'm going to do it again next year. I think I'll do it in Q2 or Q3 of next year. And if you have any ideas for topics you'd like me to cover about your career, about being a better executive, I would love to hear it. Jason@calacanis.com, ccproducers@thisweekinstartups.com, so we can put it on the list of topics you want to hear me cover. And I'll see you next time. Bye-bye. It is Wednesday, Molly. We have made it
That's right.
to the halfway mark.
Second Wednesday of the month.
It is the second Wednesday of the month. So we're almost to the halfway mark of the halfway mark.
What happened? I'm sorry, but what happened? How did September? I literally just was looking through email and I saw one from August 31st that I had not responded to. And I was like, whoa. What has happened? How did this?
What's today's date? 2
weeks have occurred already, September 14th.
We're halfway through September and I feel like I'm supposed to be in Italy right now and it's August. I don't know what happened. My summer is gone. I'm going to be skiing in about 3 weeks,
mums. I don't have my mums.
Wait, what are
I don't
mums?
have my fall decor.
What's mums?
I discovered this on the East Coast. It's totally a thing where everybody puts out a pot of mums. They're these cute flowers, and like you put one on each side of your door. It's like the Connecticut decor of fall, and I'm like, I'm in on this. I'm doing this.
I'm with
this
producer
is
Nick.
the important startup news of the day today. It's fall mums season, but also
now I know why Howard Stern, went to like this crazy deal with Sirius where he just takes the summer off. Like doing a daily show is exhausting. It's fun. You get into a rhythm, and I look forward to it every day. Mm-hmm. But it does make time go by at a brisk pace.
I really had vowed, like 6 years ago, to never do a daily show again. 6 years ago, I was like, I'm never doing a daily show again. And then the next thing I know, I'm at Marketplace doing two shows a day.
You were on the twofer, right? I forgot about that.
And then I'm like, I'm going to become a VC. And do a podcast 6 days a week.
I told you I have really good advice for you. Like if you're trying to figure out how to get more time in your schedule, it's very simple. You just add 10 hours.
Exactly.
You just decide to work 10 hours more a week.
I'm cute, but I'm dumb as a box of rocks. I'll tell you what. No, it's great.
My God.
Great.
It's so much work. I'll tell you the good thing. I tweeted today. Welcome to the show, everybody. I tweeted today, and I was talking to our president, Mike. This whole thing where when you're trying to get into a deal last year,
yeah,
and the deal's closing and you don't have time for diligence, that's all reset. And you can get to meet a company, meet the founders, ask them some questions, do some diligence, have a second meeting, maybe a third, answer their questions, and kind of, I don't want to say take your time on a funding, but have a reasonable, let's call it 15 to 30 days to make a thoughtful decision about going into business with somebody. Mm-hmm. And that's really good for both sides. So just for people who are angel investors who are listening, if you're a member of thesyndicate.com, of course, thesyndicate.com/climate, it's a great moment to just, I think, be an angel investor. It feels like the old days where high quality companies, high signal, great founders, and you have a little bit of time to be thoughtful about consummating, what becomes a 10-year partnership in many cases.
That's fair. That's nice. It's nice to know you can walk instead of sprint, although it's not my style. It's a little slow for me. It's starting to feel like magazine timing around here and not daily news timing. I'm just kidding. It's totally not.
You can, of course, try to close a deal quickly, but,
No, it's never, I don't think it's worth it. It's nice to be able to be like,
thoughtful.
Take a minute.
User privacy is one of the biggest topics in tech right now. And if you care about your privacy, you need to check out Brave, Brave. Brave is going to shield you from trackers and ads and cookies and all the creepy stuff that track you across the web. And they have 3 core products you need to know about. The fastest browser you've ever used, their core browser, the Brave browser. And they have an amazing search engine. It's not going to track you and do anything creepy like those other search engines. And they have a browser-native crypto wallet. Brave's browser has over 60 million users, including me, Jason Calacanis, on my mobile phone, on my Windows, and on my Mac desktop. I love my Brave browser. It's all built on Chromium. That's the open source Chrome project. It's amazing. All your favorite Chrome extensions work easy breezy, lemon squeezy. I got all my Grammarly and all my other extensions to just work, boom, like that. And they don't bog you down with all those slow ads crashing your computer. You can import your bookmarks, you can import your passwords, and all your settings from Chrome or any other browser with one click. I did this on all my machines. Brave Search is a truly private and independent search engine. The Brave browser, second to none. So download Brave today at brave.com/twist, brave.com/twist to browse faster, search privately, and so much more, all in a single click. Please use our URL so they know we sent you, brave.com/twist. All right. Well, speaking of thoughtful, we have 2 of the most thoughtful people in the crypto space. And every other Wednesday, 26 times a year, these 2 gentlemen, 2 of my close friends, 2 besties, and of course now becoming besties with Molly herself, they're coming in to educate us on crypto. We are crypto skeptics, I believe, but crypto curious. Am I describing our position?
Yes, I think that's 100% accurate. Crypto curious.
Yeah. And so
cautiously open-minded.
And so with us again, Sandeep Madra, you can call him Sunny. He's the co-founder of Definitive Intelligence. I'm an investor in that company. And that company lets users view on and off-chain data to understand what the Web3 user base, what the community is actually doing. Welcome back to the program.
Good to be back. Good to be back.
Sunny. Also with us. Go ahead, Molly. You can introduce the other guy. Share the love here.
I'm looking at them, not the dogs. Also with us, Vinny Lingham, co-founder of Civic, a startup that encrypts identity information on the blockchain. And your new startup, remind us of the name again. You've got a new startup.
Yeah, Waitroom. Yeah, that's it.
For setting
Waitroom.
One-on-one video conferencing.
Like drop in for people who are operating on previous time where it's like everything's got to happen like this. Drop-in meetings.
We're focusing on stand-ups, stand-up meetings and office hours. So you can just get in a virtual space, get people to line up to ask you a question or chat for 5 minutes. And we've already lost the whole water cooler culture, knocking on someone's door in the office culture at work, and no offices anymore. And we're trying to create the virtual version of that. So
is it designed for enterprise? Is it designed for consumers? Or you're kind of trying to split the difference there?
Yeah, we actually launched it a few months ago, and we tried the influencer market. And we, from a business perspective, we had lots of people using it, thousands of people using it. But the problem is that influencers don't always want to go on a regular basis. So it's very lumpy in terms of like usage for influencers. But the more we speak to companies, the more we're just seeing everyone's having Zoom fatigue. People want to have, use this product on a daily basis. We use it for stand-ups every day. We get our stand-ups in the company done in less than 30 minutes. Everyone gets like 2 minutes to give a quick update. Very, very, very efficient. And so we're basically repurposing it for SMB, enterprise, teams, etc. Waitroom.com, WAIT, room.com. Yeah.
Nice.
Premium URL.
Thanks.
The chat, by the way, is of course also noticing it appears you have a weight room behind you. Lots of puns. Lots of puns happening in the chat today.
Is that a tonal behind you?
Is that a tonal?
Oh,
that's
great.
a tonal.
Look at that.
Awesome.
It's like a flex and a flex.
I don't know if they have a tonal competition. Do they have a tonal competition mode where we could, go?
I would totally do that with you, Jay. Come on, let's do it.
It'd be fun if we. No, just also Vinny. It's interesting, Vinny. Sunny and I did like a competition one time where we just held each other accountable. We would do a workout every day, and we send each other our workouts, or we were doing
steps bet.
Yeah,
we did a steps bet as well. All that was like really increased our performance. I love that kind of thing. I think we got to start with the breaking news that about Terra Luna. We have a solid agenda here, but I was wondering if we would see a perp walk at some point, if we would see somebody actually arrested due to a crypto. Excuse me, I'm a little. I got a little bit of a sore throat today. If we'd actually see this, maybe Molly, you could queue up what breaking news has happened just at this very moment.
Yeah, so it has been breaking, I think, just this morning, maybe last night, that a South Korean court has issued a warrant for Do Kwon's arrest. That, of course, is related to the Terra Luna collapse. Do Kwon and 5 others, as far as we know, are currently located in Singapore. The allegations include violations of South Korea's capital markets law. Do Kwon has been contacted for comment, but didn't reply. The Terra collapse, of course, in May was the kind of linchpin, right, that started the current, you could say, crypto winter that we're in. Thoughts on this? And like, is this going to be the closing of this particular chapter, and then we can move forward? Do you think?
And by the way, Do Kwon is tweeting. Breaking news: Do
Kwon is tweeting right now.
This is kind of weird when you're on the lam to be tweeting, but I guess this is the world we live in. So, additional breaking news.
What did he say?
He just tweeted.
Well, that's on your screen. Is it the sun or is that the moon?
Is that the moon? It's a Luna.
It's a Luna.
What is that?
I think it's the moon. And then somebody replied to him, "I like Do Kwon, LOL," and then he sent an emoji kissy face back. So
he's doing fine.
Guess he's
very stable.
It. But yeah,
I mean, I'll start by saying I don't think he's the worst offender in crypto.
A low benchmark to be sure.
I think good that it's probably he probably had good intentions and bad governance, which is what often happens when these things collapse. Look, I say that prefacing that if they find any unsavory conduct, then I take that all back. But my understanding is that he basically did what the bankers did in 2008, where you privatize profits and you socialize losses. And none of the bankers in 2008 went to jail for that. So he probably did something of that. Now, if you tell me that, hey, the guy was dumping Luna the day before and crashing the system and he's got a hidden bank account in Switzerland, I take it back. But from what I can see right now, all he did was replicate what the banking system, kind of did in 2008.
Interesting.
Yeah, I would kind of say, Molly, to your point, like, what does this mean? I think hopefully we can get some clarity, building on what Vinny said, is what happened. And, I think everyone needs to know. And then from there, we can kind of move forward. So I actually think it's a good thing if he actually, comes to it and we all learn what happened, and then we can kind of build the safeguards around it so we can move forward together. I think without it, if it remains in like kind of a shroud of mystery, it's a little bit problematic for everyone. And then the trust factor is way low.
But I think, Vinny, you make a really good point too. And it sounds like some of this comes down to maybe the difference between laws in South Korea related to capital markets and laws in the US, which are still pretty minimal.
I think it's not even a legal thing, right? So I think on a global basis, we have a high variance between, governance and ethics and morality across the spectrum, right? Where I come from in South Africa, I think that the governance levels are a lot, the bar is a lot higher, or used to be when I grew up, a lot higher in terms of, ethics, morality, etc. When you move outside South Africa to other countries in Africa, it just slides downhill. Even in the US and other parts of the world, it's like, well, people take a lot more risks that they shouldn't take. So Africa's biggest problem actually it's been a very conservative country from, apartheid and a whole bunch of other things in the, between 50s and 2000. And so my point is, when it comes to corporate governance, it's something which we just don't like. I've seen the craziest stuff happen all around the world where, founders go and throw massive parties and pay themselves whatever they want and this and that. And the crypto world, that's just amplified. And so in certain countries, the behavior may be legal, maybe, unethical. It may put shareholders out, whatever, but it may not be illegal. And so I don't know what the climate in South Korea and what the laws are there, but I can say that there's a very broad spectrum in terms of what's acceptable and what's not when you go country by country and governance structure by governance structure and culture by culture.
Yeah, this is a really interesting one because my understanding of the Korean market was they vacillated between being super conservative when it came to crypto. Then the people of Korea embraced it in such a major way that the politicians became permissive. And then, of course, we get a collapse like this and people are upset. So now they're vacillating back to, maybe enforcing rules. So do either of you know the crypto market in Korea? Because I remember when these crypto projects were launching, one of the playbooks was to sell to retail in Korea. Is that actually accurate? Because I did have companies that were pitching me say Korea was like in their top list of places to, do an ICO, to do a coin offering, to launch a product.
I mean, Sunny, you may have a take on this. I don't personally know what the market is. I do agree that, and I have heard say or otherwise, that it is very consumer focused. And that is the problem, by the way. I mean, for those of you who think that I'm a crypto, I'm not a skeptic. In the same way that Jason and Molly are. But I do think 98% of these things are scams. 95%. There is some very high percentage number.
That's the same way. Yep, that's the same way that we are. Yeah.
I'm the guy looking for the 5%, right? Out of 20,000 crypto projects, I want the top 50 or 100 to invest in that are going to last and survive for the next 5 or 10 years. Majority of these things are rug pulls. They get you to put money in. There's some guy promoting it, hyping it, selling it. Volume goes up, and then they just pull the rug on you. The team dumps. Then no one really believes in the projects. The other sad thing is actually there are also a lot of good projects where investors who have got long-term views get into it, and whether it's through third-party groups that are pumping and dumping the coin or whatever it is, they mess up those projects. So you have these like externalities that come into play where people go, "Oh, this is a great project. Let's pump the coin, let's sell it to retail, and then let's dump and get out." And it actually affects the project as well. So, and Sunny's got a lot of this data because of his company and what they do there. But it's very, very sad the way crypto is right now. But if you ask me, should it be regulated? I don't know how you can regulate it when you have 180 countries who can't even agree on how to fix the world's energy problems right now.
Yeah, I think just building on that, like financializing before product market fit is really risky, right? Mm-hmm. You guys, Jason and Molly, you see this in your investing business, right? So if you financialize these things before they've kind of achieved actual traction, it's danger. And that's what's been happening a lot in the crypto markets. Now, the flip side is all the data is available to everyone. So it's not as opaque as it is, say, in startups where you have to rely on the company to provide you that information. You can look at their on-chain behavior. You can see what's happening. You can see who the holders are. You can see what the transactions look like. And so you have to kind of merge those things together in this new world.
So
if they are sophisticated, right? You have to know how to look on the chain and have tools for that. Are there a lot of tools for that?
Yeah.
There's a decent amount now. Yeah.
There's you.
But this is the problem. This is the problem.
Yeah.
Retail people that you're putting in. I mean, put an example in. You're putting in $500 into a project. Are you going to go and spend 20 hours researching it, or even 50, or like 10 hours? Like most of the time, it's like I'll put $500 in. I'll put $1,000 in. You don't have the time to do the research. You kind of rely on word of mouth.
Yeah.
Friends. Like I see some in the comments here, and people asking like, "What's the definition of a scam? How do you look?" It's very simple. When the intention of the project is not to build the technology, but to enrich the people behind it, that's kind of a scam in my mind. Okay. And the opposite would be, for example, I mean, I always use a good example. Like Civic did a token sale in 2017. You look at it on chain, we're still sitting with 330 million tokens. 1/3 still there. We haven't sold any. We did the ICO. We've built a whole bunch of stuff, created nonprofits, etc. around this, but we haven't. Like I haven't taken a profit out of it yet. I'm still waiting to solve the product market fit issue, solve the industry issues. What we find otherwise on other projects is people go and run these ICOs, they take the money, and if you go and follow some of these founders on Instagram and wherever else, what are they doing? Flying private jets, yachts, huge parties, paying for ecosystem funds and like that. It doesn't, I mean, whatever. This is not going to end. This is not going to end well, and it hasn't already. I mean, I didn't touch the whole Terra Luna thing either. I didn't put money into it for lots of reasons. Like I've got issues with stable coins and how they're done. This is a very complex ecosystem, and unfortunately, they're preying on retail people who just don't understand it. And maybe it's like lottery tickets, right? You're putting $500 in, $1,000
modern day boiler rooms, right? We saw this in stock markets in the early days as well. Just regulation has to come in and help with these things.
On the program today is Darina Kulya. She is the founder of OpenPhone. Welcome to the show, Darina.
Thank you so much, Jason. Great to be here.
Now, what mistakes do most founders make with phone numbers in their startups?
Really delegation, right? Because what ends up happening is that as a founder, when you're starting, you do everything. You're the salesperson, the support person, You
make the coffee, you do HR, marketing, sales, recruiting, everything.
Yeah. But then eventually you have people joining the team. And what ends up happening is if as a founder, your phone number, let's forget about the privacy, the spam, all that problem. Let's say it doesn't exist. But you're not going to want a year into your company, 2 years into your company to have all the support calls or all the questions come to you, because now you've just hired your support team. Why did you hire them?
Yep.
So that's another reason why having that separate number makes so much sense, because you can always delegate those calls to your team as you grow.
All right, everybody, here's your CTA, the old call to action. Twist listeners, 20% off any plan for your first 6 months. Just sign up at openphone.com/twist. And if you got an existing number, no problem. They'll port it right over. openphone.com/twist, openphone.com/twist today for 20% off.
Let's pull the thread on this data question and how you could maybe try to identify the 5%. Because Sunny, you're saying the data is available. Vinny, you're saying it's really hard to dig through that data. Like, should retail just stay out of this for a while until those signals become more clear? Like, what is the smoke that you should look for that says, no, this thing is a dumpster fire, as opposed to this is part of the teeny percentage that is real or could grow into something really meaningful?
So if we take a step back, Molly, right, think about penny stocks, right? Someone's commenting on this in the chat, right? So in penny stocks, like there's some level of risk that it's very similar, but you have reporting requirements, right? So those companies have to basically, do quarterly reporting, talk about, a bunch of standard metrics. And so the same way that you would now, does everyone who invests in penny stocks do that? Probably not, right? They get a call from someone in a boiler room saying, hey, I heard about this stock. It's going to go through the moon. There's deals about to happen, all stuff that really, shouldn't be happening. And so I think very similarly, there are a bunch of standard metrics. Like, to ask your question, you can look at how many holders are there, what the hold concentration looks like. And there's lots of tools. You can use, Definitive. There's other tools out there as well, like Nansen and Dune, that you can go to and get this information from. And so I think the beauty of Web3, more so than even like say these public companies, is that because the the asset itself is digital primarily, all the information is online. So all the stuff that you'd want to look for, questions you want, is like, what are your daily actives and how many people are transacting and how many holders are there? Is it all, what Vinny talks about is 1/3 of the tokens are held by the company. You can go and verify all that. And I think, that now what will probably happen is there'll be institutions that'll start to develop that will do that for you and say, here's a bunch of safe things that you can invest in because we've vetted those things through the on-chain analytics.
It'll be like our syndicate model. Like somebody we'll do all the diligence and then we'll send it out to the syndicate and say, like, we are confident that this is a good deal. And then, exactly.
Yeah. Well, and that's a good point. If you want, sorry, Jason, if you want exposure to crypto, and the problem is this, okay? When the high net worth individuals have exposure to crypto through funds like, Multicoin, I'm a partner there. But we have minimums like $250K, $500K, whatever into the fund. So you can't just come in with a 25, 10K, 5K check. It doesn't work. So there's this unfortunate problem where the people who actually understand the space and have the skills can't really service retail. And retail investors have to just go and like pick a random coin on Coinbase or whatever exchange they're on and hope for the best. And that's half the problem. So what really is missing from the industry, I think, is a large scale fund where it's curated, but you can have more than 100 investors or more than 1,000 investors, each putting in 5K, 10K, whatever exposure they want to crypto. And that fund is managed by people who are saying, we're going to pick the top, 50, 100, there'll be some allocation to some risk assets. Most of it sits in Bitcoin, Ethereum, Solana, Filecoin, whatever. And it's a balanced portfolio, and don't take unnecessary risk with pump and dump coins along the way. That's what should happen. The problem then is you've got the regulatory issue, right? And we can go into, I think we're going to chat about the OrangeDAO and how they've done that as well later on. But there's some issues here. But that's ideally what we need, is people not just buying lottery tickets.
Right.
And as you're saying, you put out one of these projects, there are people who specialize in pumping and dumping. So even if the team had great intent, now there are people who say, okay, there's a new offering. We got in this thing for a penny. Let's all get in on it. We run whatever those Telegram rooms, I guess, are where most of these happen, or in Discord. And I've seen them. I've screenshotted them. They're literally named like pump, pump, pump. And they give people instructions. Hey, buy this coin at this hour. We're going to do it. Do not sell until this hour. And that power hour is when the original people are obviously selling.
It's happened to good projects. It's happened to lots of great projects and honest projects with honest guys. Like, I've seen it. I've been part of teams where like nothing was sold by the team, but everyone else, externally came in and pumped it. And that's because the regulations, there's no real, it's not regulated, right? Anyone can do that.
Unless people follow the rules that already exist, which they're not. They're kind of suspending disbelief that this is another rule set when the SEC is saying, as we talked about, I think maybe 2 episodes ago on the Crypto Roundtable, that, hey, maybe follow the rules that already exist. There is a corollary to this. I mean, if you were to look at equity crowdfunding sites, there are high quality ones like Republic and Seed Invest. I'm not an investor in either of those, but I know the founders of both. And I've actually used both to raise money for Inside.com because we wanted our newsletter readers to be able to invest in the company small amounts of money. It's worked out wonderfully, delightfully. The problem is there's a whole cohort of another 100 of them that will put any company up. All they care about is the fees. So just be very careful. And then many would argue SPACs had a similar issue. There were some SPACs that were absolutely real companies. BuzzFeed went out to buy a SPAC. It's a real company with, hundreds of millions in revenue. But there were ones that were incredibly speculative that didn't even have products in market. I guess the Truth Social, the one that Trump is doing, I believe it's called Truth, that hadn't even launched, right? It was just like, here's a pitch deck and we're using some open source stuff. So buyers do need to beware.
What would kill SPACs is if you just lowered the listing requirements at the exchange and said, look, people can list these things the moment they're profitable, there's cash flow or whatever, and these are the rules, and you lowered it, you wouldn't need to do a SPAC.
This is where I am conflicted. And the devil is in the details. I think it would be amazing if you could take companies public earlier and people could participate in them with some protections, right? It would be nice if people could invest in an Uber or a LinkedIn. I've talked about this many times, Molly, on the pod, in the first 5 years of the company as opposed to year 10.
Well,
And-
check out this. I mean, have you guys seen Long Term Stock Exchange, Eric Ries's
Yes.
company?
Yes.
I'm a seed investor in that. They've done amazingly well.
Explain
over
what
the
it
past
is
couple of
and what
years.
the mission is. Yeah, of long-term.
Yeah,
stock
basically it's public listings. They've got they try and get a higher standard, but more long term. So instead of focusing on quarterly earnings and quarterly growth numbers and basically being a slave to the street, you publish what the long term prospects of the company are and what you're trying to do, and you get investors who want to back it for the long term to do it. And it's a regular, it's a regular stock exchange, but they're not trying to go after companies that are going to be run quarter by quarter, because that's where things fall apart. And so I think they've listed Twilio there recently, and they've cross-listed Asana as well. But it's a different type of stock exchange, and they've got. I think they would. I'm not sure this is in yet, but they were trying to do something around voting, where the longer you hold the shares for, the more votes you get, that sort of thing in the governance of the company. Like, that's very powerful, right? It's like, day traders shouldn't really have a say in voting on company issues. If I think that there's something to be said for the longer you hold a share, the more voting power you have. So if I've held a share for 10 years, I should have 10 times more votes than the guy who buys it yesterday, right? At least 10 times, maybe more.
which is something crypto actually with smart contracts
You
would
can
be
do that with staking,
uniquely qualified to do. So just to wrap this one piece up in terms of regulation, in terms of the actors who are, doing these projects and the ones who are around it, perhaps, the next phase, decade 2 of crypto, if we're calling this the second decade, maybe the principles of these projects taking ownership and building into them some thoughtfulness that creates downside protection. In other words, hey, anybody who buys this token, the token, will trade at these intervals. But if you're buying them, in this pre-sale or whatever, you have to hold them for 5 years. And here's a list with all the rules. So if you did buy at a penny and you were, the famous example of Jason Horowitz, as Jack would say, meet the new boss as the old boss. That was the big criticism, is that, all these open, supposedly open new projects in crypto were just owned by the venture capitalists again, and who front run the market. That's the allegation. I don't know if it's true or not exactly. It's hard to know, but just having complete transparency on that. Do you think there's a possibility, Sunny, of that happening? And then given what you're doing in terms of tracking this, if people said, here's the cap table and the cap table rules, like here is a public cap table, here is the disclosures of who owns these things, and here are the rules by which they live. Wouldn't that change the whole industry?
Yeah, in fact, this is the direction it's going in. Balaji had a really good post at the end of last year called Mirror Tables. And that's what he was, sort of leaning on in there. And there's a few companies building in this space right now, actually. And I think that infrastructure for around that starting to happen, because people are asking the same question that you did, is that, hey, it's meant to be this really transparent thing, but then all this stuff happens sort of off chain. Why isn't everything on chain so that everybody can see it and we all have access to the same data, which is sort of the underlying ethos of crypto, is that everyone has equal access. It's all available. And so exactly, this is a really good post. Everyone should read it. And there's a few companies building in this space, which is really exciting. And I think as the companies that are building this come together, and in fact, one of the companies inside the OrangeDAO thing is doing this as well. So I do start to think that there's going to be some convergence happening here along the lines of what you're talking about, Jaco.
What's interesting too, and then I really want to ask you guys about the merge, or rather bait Vinny, but what's interesting is that there's sort of two ways it seems that we could go forward, at least based on this conversation. And one of them is centralization, right? Like when we talk about a centralized fund, to say, the JCal of the investment side of this, we've done all the research. You can safely invest in these coins and these projects. That's great. That's continuing to replicate the financial system that we already have and centralize and put gatekeepers in between this opportunity that was in theory meant to be the opposite of that. Or, Sunny, it seems like what you're proposing is use the tools of the technology to solve the problems that are inherent in the technology. Because an unregulated ecosystem will always kill everything around it, right? It'll just grow out of control and eat it alive. Yep. But it seems to me that if you are a crypto proponent, you should be looking to the tools built into Web3 to solve the issues we have now. Because look, no one's going to behave if the power law is in the room. There's no universe in which everybody's going to be we all agree to follow the rules for the health of the ecosystem. there's money to be made, son.
Yep. Yeah, no, I think you're right. And I think that era, as Jay Cal called it a few minutes ago, like the era we're coming on is with these tools now. And so we'll see more of that, and we'll look back and be like, oh my God, I can't believe there was a time we were investing in these projects and we had zero transparency on what was happening. Now we have these tools and everyone has access to them. And that democratizes everything in the way that I think it should be, right? And then it's sort of what you guys are doing continues to be out there for the specialty and the knowledge that you guys have, but it allows anyone else to kind of go out and say, hey, I've got these collection of assets that I've vetted through these tools, and you should invest in those things, which I think is great for the ecosystem.
Mm-hmm.
All right, let's talk ETH merge.
Let's do it.
We are 11 hours away. It's interesting if you just do a search for ETH merge on Google, they literally give you a countdown clock. So this is such an anticipated event that Google made. Do a search, producer Nick, for ETH merge, and it's pretty funny. They literally made a countdown clock on Google. Google will make a widget for things that are important. Like a movie or something.
11 hours and 43 minutes. But that's because it's so awesome, right, Vinny? Everything about it is perfect, and 99% less electricity usage, and it's going to make it so much more efficient, and all the transactions are going to settle immediately, and Nirvana will arrive.
Sounds like Solana.
Ooh, talking the book here. Okay, we got a book talk.
That's what I'm here for.
But I mean, to be fair, they're moving to proof of stake, which is what Solana is. And look, there's a 99% chance everything's going to go fine. I had a conversation last night with another VC in the space, crypto VC, and we were discussing like what are the issues here. And I said, look, it's highly probable that this, let's say almost a certainty that's going to go through smoothly. However, if there are any bugs, issues, attack vectors that may exist on Ethereum or a layer 2 that's using Ethereum or something else, it's unlikely it would have been disclosed prior to the merge. Just because the testnet's available, everything's fine. Any malicious actor or hacker is not going to tell you, hey, I figured out how to steal money out of this thing after the merge. They're going to wait for it to happen, then steal the money. Okay? And so that's the issue here. Now, it's probably not going to happen. But if it does, I think we should at least assume it's a non-zero percentage chance. It can't be zero.
You agree, Sunny? Non-zero chance?
Yeah, always a non-zero chance, right? We can't.
Okay, so it's always a non-zero chance. So then I'll just challenge you both to give us, what do you think the chance is? 1%, 2%?
I think well below 1%.
Okay.
I think somewhere between 1 in 250 to 1 in 1,000. But it's not
1 to 10% chance. You're saying, wow.
No, okay. 250 to 1. So like 0.4%.
Oh, I see. 250 to 1. That something happened. So well under 1%. So you're both well under 1%. Got it.
Yeah, under 1%. It's been technically reviewed. It's really good, etc. That's not the issue. And I don't think Ethereum itself. I think that the chance of something wrong with the Ethereum chain is probably less than 1 in 1,000. Okay, the issue is with the collateral damage around all the other systems that rely on the Ethereum, the main chain, right? So there could be some, again, the surface area is very, very, very wide and broad.
So what you're saying is there could be another project that interfaces with Ethereum that, hey, the code could just break.
Yes.
And we don't know. And
someone hard-coded a variable or something and everything is, and they didn't see it coming because the attacker didn't reveal it with the testing, right? Because they're not going to.
Because why would they? Why? Yeah. Well, walk us through though the benefits and why it's worth it. Give us the merge 101 for people who are new to this, proof of work to proof of stake transition.
The most important thing is, first of all, it reduces Ethereum inflation because now you're rewarding stakers as opposed to miners, and it reduces the amount of energy consumed by the Ethereum network, so it makes it very green, like Solana, and it's a lot better for the environment. So I think that from just those 2 points, and I think there are other things that will speed it up and make it cheaper, etc. over time. But just those two are just good enough for me right now. This is a very important move. And it's about time. It's taken a lot longer than people thought. So I think that, between look, this is the thing. If people are listening to this, if you're going to try and invest money in crypto, just buy Ethereum, Bitcoin, Solana, and you're probably going to be okay. Like, you don't have to go chase after coin number 300 down the road. Yes, you could make 50 to 1, 100 to 1 on that, but the risks are already high. You're probably going to lose your money because you just can't pick. just pick the winners. Like, just play on some of the winners. I know people people always ask me about, what do you think about Cardano and Polkadot and all these other things? Like, look, the safest bet today is Bitcoin. The second safest bet is Ethereum. And my opinion, the third safest bet is Solana.
Not investment advice, but explicit investment advice. We got to start at the top.
What's safe?
Turns out these maybe aren't securities, so it's like fine.
No, but it's not even about that. It's about like the fact that if you just look at the volume, Solana does more transactions than every other blockchain in the world right now.
Mm-hmm.
As a layer one.
Yeah, but 90% of them could be garbage for Vinny.
Yeah.
You know that too,
really?
Right?
Yeah.
Yeah.
So
because the transaction costs are so low or infinitesimal that there's just a lot of garbage transactions on the chain. So I think that's
more noise on the wire.
Could be more noise.
Not
entirely. I mean, there's probably some percentage there, but
Sunny, go ahead. I think you were going to answer the what's good about it question.
Yeah. Look. Ultimately, I think Vinny touched on it. It lowers the energy consumption, which is very important. It's been a big criticism, and I think it's limited the amount of institutional investment that could happen, because a lot, and I don't know if you guys deal with it in your fundraising, but a lot of institutions start asking that type of question around investing, right? Are we investing in something that's like, bad for the environment? Ultimately, I think that, there's a 5-step process that they're going to undergo to get sort of transaction speeds up and things like that. And this is like sort of the first step. And we talked about it a little bit last time, right? This doesn't necessarily right away lower gas fees or anything like that, but it puts things on a path to increase transaction speeds and ultimately, lower gas fees, but not in this particular event. But it's like sort of the first major step of, I think, a 5-step process that the Ethereum network will undergo in the next couple of years.
Well,
and then I think the goal is to get to like 100,000 transactions a second or something like that, which then Vinny will say Solana can do today. Right?
Yeah. So. This is a chart. I'm not sure how old it is, but it was just showing, and I think it's relatively directionally correct, the amount of energy consumed by one Ethereum transaction, producer Nick, you pull it up, versus 100,000 Visa transactions. So it is known that if you want to have a distributed network doing work, it's not as efficient as the one that Visa's been grinding on for whatever, 3, 4, 5 decades, and whatever 2, 3 paradigm shifts, probably from mainframes to mini computers to, client server to cloud computing. But if they're even using cloud computing for it now, but
and to try to contextualize these numbers, like a single Ethereum transaction is currently uses 205 kilowatt hours, which is equivalent to the power consumption of an average U.S. household over 7 days.
What? Wow, that's obscene.
I mean, welcome to my rant already in progress for these last few years, because this is, I mean, what I wonder is that as we make this, as ETH makes this transition, does this start to become a problem for Bitcoin? Because it's indefensible. I'm sorry, the energy usage is indefensible and continues to be so. And I have been saying this for years, but it's like, at some point, to your point about institutional investors, if you've got Solana and you've got Ethereum and you've got proof of stake projects that are using a lot less electricity, can you justify, as an institutional investor with presumably some kind of a net zero goal, having any Bitcoin holding?
I will take the other side of that argument.
Yeah, let's go.
I think that if anything, Bitcoin is going to be one of the things that accelerates the move to renewable energies. So one of the things to keep in mind is the more expensive it gets to mine Bitcoin, and the more you can't use marginal energy consumption. You can't use like electricity at home. You can't use gas. So those miners have to move to places where renewable energies are being used and are cheap. So next to nuclear plants, etc. And if the price of Bitcoin grows high enough, it actually accelerates us as a species to renewable energies, because it cannot consume the traditional sort of fossil fuels. It has to rely on clean energy like nuclear. And that if the demand for nuclear grows substantially because of the amount of miners that need to mine Bitcoin, geothermal included, you're actually going to see an increase in supply, because it takes years to put these plants up. So the thesis on a 10-year, 20-year trajectory is that Bitcoin can accelerate us to renewables by forcing by the market actually saying, we don't trust government fiat. We don't trust printing of money the way it's happening right now. We do trust Bitcoin security. So the demand for Bitcoin goes up. It increases the amount of security required for the network. And then those miners cannot go and burn the fuels that you're using in your home. So it's a virtuous cycle at that point. I know
been
it
hearing
seems
this
like
argument.
a stretch.
No,
I know
I mean,
it seems like a stretch. But,
yeah. Well, it's a 10-year argument. Like, I've been hearing this argument.
But power plants are 5-year, 7-year arguments. Like, this is the problem we have in energy.
Exactly.
The energy
And
crisis
wouldn't
in
you
the world.
rather have a power plant? Like, I would much rather have a nuclear power plant come online to power Europe than to power more mining.
But how do you get
It's
past
not going to
that?
be additive.
But this is the problem. So this is where capitalism beats politics. Okay, in a political world, we'll go back and forth arguing all day long about nuclear and green and blah blah blah. And when you have this like huge, thousands of Bitcoin miners all saying, "Hey, we'll move to a country if you put up a nuclear power station," and the country goes, "Hey, dang, let's do it. We'll put up a nuclear power station today, move your mining equipment here." All of a sudden, you have real fair market global competition for cheap electricity, and you're going to see more nuclear power plants, sprout up around the place.
I actually wonder if that's true. Like, I wonder if.
Oh, absolutely, absolutely. If South Africa said today, okay, and I live in San Diego, but if I went back to South Africa and became president, and I said, okay, we're going to go and put up 3 nuclear power stations across the country and make it a tax-free zone for Bitcoin miners to set up data centers, mining equipment, and we're going to give you the cheapest energy in the world.
They'd line up.
They would line up, and that would basically bring.
So then my question is that actually?
Then it would take 10 years to build that plant, and right now you have Kentucky and Montana saying, "Just come here because we have coal."
Well, it doesn't matter.
So they're going to go where the energy is.
No, coal's going to be priced out. This is the point. All the marginal energy, all the non-renewable energy, it will be priced out for powering Bitcoin mining within 2 years, probably 3. So we already have this problem. I mean, guys, people can't afford to run their kettles in England. How are they going to afford to do Bitcoin mining? It's not going to happen.
I wonder if there is an energy disruption, Molly. I wonder if crypto becomes one of the victims, because if, like, this is really interesting, if Europe has this really cold winter and people are running mining.
Or Texas, right? You already had a situation in Texas where they basically were like, "Hey guys, you need to turn these rigs off, right? You need to shut down mining to preserve."
Oh, did they tell them to do that? Yeah.
Yeah.
So, but are there any rigs in those regions now? Are there rigs in Europe? Do you think?
Well, there are rigs in Europe. So a lot of European miners. I mean, for example, Iceland is a huge mining. There's a huge mining operation in Iceland because of geothermal electricity. So what I'm saying isn't, guys. What I'm saying is that if you think, take a zoom out. Okay, take a zoom out view of the world. If you have a Bitcoin miner, next to a coal plant, and the price of it goes up 5x. You jump on a plane, you take the miner with you, you go sit down in something like Iceland and you use geothermal, or you go next to a nuclear power station where it's cheap. Bitcoin mining operations will move to where the cheapest electricity is because they don't have a choice. They cannot operate at high electricity costs. So I think it's a.
I think both of you guys are right. In the long term, I think, Vinny, you could be right that this will create demand. And in the short term, Molly, I think you're right that people might burn stuff that's bad because somebody might be like, I got a bunch of coal sitting here and I'm willing to burn it below market in some crazy country that doesn't care about the environment.
I actually think like with technology, you have like Moore's law, right? Which is and versions of that. And I shared something in the chat if Nick can pull it up of like the typical energy usage of different types of transactions here. So you see like a Google search down to light bulbs and charging your iPhone, right? And so look,
why don't you read that for the audience just so people get an idea?
So like a Google search is like 1,000 joules, right? Charging your iPhone is 45,000 joules, right? And watching an hour of television is 540,000 joules. And so, look,
and a single Solana transaction is 1,800 joules.
Yeah, it was
nothing. And an ETH2 transaction is 126,000 joules.
And look, I think all of this will just keep improving, right? And so, I think technology will just find a way to trend towards the top of the thing here. And we've seen that happen, and that's why I think calling it out is important, like you are, Molly. But I think saying, "Hey, technology doesn't work around this," I think that's impossible. And then you got to look at all these other things here. So
I think
I guess that's what I mean fundamentally when I say, "Is it a problem for Bitcoin?" Right? It doesn't mean that what happens is the financial incentives are actually go towards Solana.
Read the chart from the bottom up, Molly, because that's where it gets really interesting.
This is exactly what I'm talking about. One
hour of air conditioning is 12 million joules. Okay, 1 hour.
120 million, or so 12 million, yeah.
He's 12 million joules. So, running your air conditioner 10 hours a day is 120 million joules. Okay, that's where your energy consumption is, folks. Watching an hour of TV or playing your video game, 540,000 joules or 700,000. So of 1 hour of air conditioning versus 1 hour of TV is 14x. So just keep that comparison in your head. Watching TV, 500,000 joules. Hour of air conditioning, 12,500 joules. Okay, just keep it in your mind.
Yep.
Now we go up to an Ethereum transaction. One of the current ETH pre-merge in 11 hours, 692 million. In other words, it would be the equivalent of air conditioning your home for 70 hours or so, 60, 70 hours for one Ethereum. But that's not all, folks. One Bitcoin transaction is 7 billion joules, which would be the equivalent.
But remember, there's a cap, right? There's a cap on how many transactions per day Bitcoin can run.
I know, so but this is bonkers. I never realized the scale of this.
That's the issue.
It is unbelievable.
But the flip side,
now you see me freaking out every day.
But the flip side, Jake, is look how much they cut Ethereum down from 692,000 to 100,000. And
that's a huge deal.
And one more turn of that, and look at what Solana's already doing, to Vinny's point, right? And so
yes,
everything kind of, I think things
Moore's
will trend
law
in this
exists
direction.
in software.
Like I made Vinny totally heated, but what I really meant was people should invest in Solana and not Bitcoin. For exactly this reason.
I have more Solana than Bitcoin. I mean, the thing about Bitcoin, look, but Bitcoin, I think is, and Chamath, our friend Chamath says this, he said this years ago, and I always stuck with me. He's like, Bitcoin is insurance for schmucks. That's it's like, look, you got to own some of it in case everything goes to
1%, sure.
1% chance, whatever. You got to own some of it, but it's not the biggest part of my crypto portfolio because I think there's a good chance that it doesn't actually become the most useful tool out there.
I'm a free market guy. I'm a free market guy. However, when something is this out of whack, I just want to bring it up. Would the Western world be wise to look at the cost per transaction of these and step in and say, listen, Bitcoin, other services, you need to get your transaction costs lower by this date, or else this penalty, i.e. a tax, i.e. whatever, will come into play? Or do you think the free market just makes everybody sell their Bitcoin at some point and move?
Free market. This is the thing, Jason. Like the more intervention we do in these markets, the more we're not going to push innovation and figure things out. Like
Bitcoin's still number one by far and large.
Why?
I mean, you've been watching the news this summer
because it was
right?
first.
Like you saw the dried up war and the like. I'm just saying, at some point you pick your crisis, and if your crisis is like existential, and a third of Pakistan is underwater, so you go like, we're going to ban this. And I'm not a proponent of it, but I do think we're going to get to that conversation.
Okay, so Vinny, you're free market.
Okay, so let's take another argument.
I'll go to you.
If I said to you today, all the energy in the world is free, would you care?
Of course not. Yeah, if we had 1,000 nuclear tactical small plants up and running, obviously
the largest nuclear reactor in our solar system is the sun, right? We have solar energy. So if we had free energy, this wouldn't be a problem. So then let's start. So that's a first principles question. Okay, the next question would be: so then why is energy not free? And why is this a problem? And then the question is because we are reluctant to move from oil, gas, and non-renewables. Why? Because special interests, corruption, paying off governments. Sure. So if you go down to from first principle working up, you realize that we're living in this like world that's been created by the people before us and being maintained by the people in power.
We're making the money.
You're making the money.
Sunny, let me bring you in here.
Energy is free from the sun. It is. And we just need to figure out how to harness it or use things like nuclear.
Okay. Sunny.
Yep.
Why? I think this is it. The first question I want you to answer is, if it is true that the free market will work this out, why is Bitcoin still number one? Let's start with that.
Vinny touched on it a little bit. It's sort of been around the longest and the most secure. So there's just like sort of it's never been hacked. It's been around the longest. People feel comfortable with it. There's the notion that there's only 21 million possible Bitcoins, right? So there's sort of an end game to everything that's happening there. And it's not a network that, even though the transaction energy is pretty crazy, like we saw, there's not a lot of transactions happening there. It's not it's not a Visa network that's, processing hundreds of thousands a second. So I think that's why you kind of will remain to see it there.
Here's my second question for you.
Yep.
Then, now that we've got that established, it's because it's been around the longest, the most secure. We get it.
Yep.
why hasn't Bitcoin, maybe it's going to move to 3-point question here, but I appreciate you answering the question so concisely. Number 2, why has Bitcoin not taken transaction costs as seriously as Ethereum and Solana?
You mean the energy? Well,
the energy per transaction. Why haven't they solved? Ethereum obviously was motivated to solve it. Maybe they felt like Solana was clipping on the heels. I don't know the reason, but why is Bitcoin not addressing this?
Well, I think Vinny can probably tell you more because he's been involved deeply in this for a long time. But I think the community that it's taken to cause this merge to happen, which, we saw that energy efficiency, it takes a lot of people, and there's just not as many people in the Bitcoin ecosystem now that are willing to undertake that to make it happen.
Laziness or lack of resources. Is that correct, Vinny?
I think.
Well, everybody's making money.
It's not that. What the issue with Bitcoin really is that there are no changes that are being permitted to the network. Yeah. So here's an example. And I fell out with the Bitcoin community in 2017. I mean, I was a Bitcoin maximalist in 2017, and now I'm done. I'm happy to look at other things like Solana and more energy efficient things. I think Bitcoin has a place. I just don't think it's like I'm as passionate about it as I was in 2017. For one simple reason, you could drop the cost per transaction on Bitcoin 10x by increasing the block size 10x. For example, from 1 megabyte to 10 megabyte. Okay, you could do it, but there is no will within the community to make any changes to the base layer of Bitcoin. So you can't fit 10 times more transactions. I mean, in fact, look at Bitcoin Cash and Bitcoin SV. They've scaled it 100x, 1000x. So it's not actually it's not a technical issue. It's a philosophical issue. We don't want Bitcoin to change. The architecture can handle, but Bitcoin. So
they don't care about the environmental footprint. They care more about their own interests. I got it.
Yes.
So then what I'll ask you, Sunny, is I know that you are a holder of Bitcoin or have been. Does this make you change because they're unwilling to change, because we know energy use is acute and is a very focused issue? Does this make you change your position on being long Bitcoin? Why are you holding Bitcoin instead of moving to Solana and Ethereum, where we see is it 1/1000th now of the energy or more?
Yep.
Why are you holding Bitcoin if this exists as a concept and Bitcoin is your largest crypto holding?
Yeah, I mean, I would break it down in a slightly different way, Jay Cal. Like when I look at like sort of my world of investing, and I still haven't gone through this myself. I think in order to do that fairly, you have to look at everything you invest in, right? Whether it's even public equities and what energy impact they have, right? And so I'm not doing that there. So why should I just look at that one asset and do it? And so I think if I'm going to get to that moment. And this has kind of been a challenge. I was trying to pull this up. Like I know Molly was a bit up in arms on the energy consumption there, but I'm sure if we look at other things in our daily lives, like on an aggregate basis, it's a lot more than even what Bitcoin is doing. Those charts, they make it kind of really pop out. And so I think if you're going to do that, you have to look at it like really holistically, right? And say,
so you haven't done the hard work to look yourself in the mirror and say, geez, do I need to change my portfolio allocation here? It seems to me the logical thing to do here, Molly, and I'll bring you in now. The logical thing to do here is if you think energy is an important issue for the world and is this charged, so to speak, would be to make a trade based on that. It does seem to me, if we're here on this Tip of the Spear podcast, breaking this down so acutely and so deftly, that somebody in politics somewhere is going to get this message and then maybe consumers are going to start to say, why would I own Bitcoin instead of owning these ones that are more energy efficient? Go, Mom.
I mean, fundamentally, although I obviously have a strong opinion about this, that is my question. When I say, is this going to become a problem for Bitcoin? I'm talking about this PR question. I'm talking about exactly this, which is at some point, people, policymakers, investors, financial institutions with net zero goals will start to make this calculation. And it'll be a huge part, I think, of the crypto ecosystem.
Look, I think that the Bitcoin sort of maximalist and the Bitcoin mindset has a point. Like when I went from being 100% Bitcoin to maybe 20% Bitcoin in terms of like my passion and views. That 20% is my schmuck insurance that if put it this way, if you believe that the leaders of the world are a highly organized, competent, orchestral bunch of people who can fix up all our problems, you should own 0 Bitcoin. But if you think they're a bunch of incompetent fools that are going to basically trip over their own laces in the next couple of years, you should probably own more Bitcoin than you have right now today. And that's where the camp I'm in is I think that they're going to screw up. I think that then as a unit of account, people start saying, well, can we trust the pound, the euro, the dollar? Let's just trust Bitcoin, or maybe it's Solana or Ethereum or some crypto. And then the world starts transacting in a different cryptocurrency or different unit of account. Right now, we use the dollar. But if Putin manages to get people off, the more we fragment the market in terms of away from the dollar into other currencies, the more these cryptocurrencies become a unifying layer for the world.
All right, Molly. You and I were talking about DAOs. We're obviously going into our public raise. Starting, I think I'm doing my first webinar tomorrow for Launch Fund 4. And we're doing 506c public raise. Other people are now looking at DAOs and funds. And one that has, and we've talked about it myself. I've talked to Sunny and I've talked to Vinny about this possibility. The OrangeDAO. This is fascinating to me. This is the most fascinating story of the week to me.
This is if we start a DAO, it's going to be because of this story right here. So,
well, this was your idea, Jason. You had this idea before anyone else. I give Jason credit for the first person to publicly put this idea out there.
All right. So the idea is the OrangeDAO, the YC alumni crypto collective backing Web3 startups, which just 3 weeks ago raised $80 million. We should note, thanks to Sunny, that before we get into it, YC does not have any official affiliation with OrangeDAO. On Crunchbase, it's described as a decentralized venture capital organization. Most of the money from its raise came from strategic investors and Layer 1 blockchains Algorand and Near. The fundraising was also backed by an undisclosed number of DAO members and a few institutional investors. The GP actually is Ben He of I Can Has Cheeseburger, who explained that the DAO itself is structured as a Cayman Islands foundation company, and the fund is run as a separate legal entity by He and a few other general partners. We've kind of been kicking around generally this idea about whether crypto is going to upend venture capital, and it sort of seems like this is that. Is that fair? Or could be that, the start of that?
Let's just talk about capital formation, because I think a lot of people who are watching this may not understand the breadth of how capital forms. So if you have a venture capital fund, do you have limited partners? They all put a minimum commitment in, say $100,000, $250,000. If you get 40 of them together, you have 10 million, so on and so forth. So you scale it up. And as you need capital, you draw down from that fund and you do capital calls and people put money into the GP, the general partners. Effectively they have a place that they hold the investments in for the benefit of the LPs. So here's the issue. The moment you go long tail, and long tail is lots of smaller investors, it's a lot more work to get $5, $10, $15, $20,000 from 1,000 people than to get 40 or 50 people to give you $250,000 to $1 million checks. And so there's a cost of managing all that. There's a reporting compliance cost, and then there's also what happens if someone does a capital commitment for $10K and then they don't pay up, and then, you have it's less likely that you have big LPs reneging on deals than when you have a lot of smaller LPs trying to get money out of them, and it's extra work. So you probably have to collect the money up front, and then you have to look at what's the fund size, what's the return profile. And the problem you then have is if you did $1 billion fund with 10K investments, the economics just don't work. It's too many people. The returns are, you put $5,000 in, you get $6,000 back. No one's going to care that much about it. Doesn't scale. So you got to find the right sweet spot. And what is that sweet spot? What YC's done here with 1,000, effectively founders or alumni is probably the right sweet spot. You probably want to have a $50 to $100 million fund with no more than 1,000 people running small checks and probably collecting all the money up front. So you don't have to deal with the capital call structures that you have to do with in regular VC. And so I think they've actually done a pretty good job on this so far, but they've done it outside US jurisdiction. They've gone to a foreign country. I think it's somewhere Cayman's, Bahamas, wherever. And they've gone and created this because the US doesn't facilitate this in the same way, especially in the crypto world and regulation. So this is a bit of regulatory arbitrage, but I think they've solved for the capital formation part. That's
well, Sunny, in your notes, you also pointed out that they're skirting not only those US regulations, but the way that a DAO is supposed to be formed, right? With this two legal entity structure.
Yeah. So and you guys probably know a lot more than I do, but there's a DAO and then there's a venture fund, and they're two actually separate entities. And so the venture fund, which has limited limits around how many people can be involved in it, they've worked around that by creating a DAO as a separate entity, I think in the Caymans or something like that, right? So they have like 1,000 people in there, but less LPs inside the fund. And what I was actually going to ask you guys, because I feel like you guys have spent more time thinking about it, I was just putting together what I researched from it. Like, does this framework actually work for what you guys are thinking about? I'll kind of flip it back around to you guys.
Okay. So they formed a traditional venture capital fund. They did it properly. They're not breaking any laws.
Yep.
It has nothing to do with crypto. That's all fiat money.
Yep.
They're not investing ETH into a company, or they're not getting ETH from somebody's wallet and then, voting to invest into something. Okay. So let's put that aside for a second. They did everything right. It's just a standard venture fund like anybody else. Now, what is the purpose of the DAO? You took some really good notes, Sunny, and you're thinking about it. And I think they're taking the DAO and saying the DAO is going to be for due diligence, deal sourcing, and post-deal help. So in a venture fund, you might have some associates, you might have some researchers, you could have some principals. They're out there, they're pounding the pavement. They might have venture partners, scouts, of course, trying to find you, hey, you should check this company out. So if you aggregated all the YC folks and you said, hey, go to this Discord and then talk about the companies, and then the venture fund partners look at what they're saying and then just cherry pick, it's kind of like just creating a giant scout program, calling it a DAO. So to me, it's a scout program looking like a DAO, but you have to remember there is also going to be tax treatment and issues around the DAO. And that's where I think there's going to be some legal details here. Those 1,300 people are going to have to be pre-vetted. They're going to, I don't know how you distribute. So let's say you have 20% profits, a carry. Let's say this 80 million, I'm going to just say it goes 3x, like a standard venture fund. It goes 3x. 80 times 3, 240 minus the original 80, 160 in profits, 20 million of 160, roughly $30 million in carry. So let's say there's 30 million in carry, that's 1,000 people. Okay, everybody gets $30,000. Or this person gets more for having done this. They voted, how does that even get distributed? When it does get distributed, what is the tax treatment of it? Is this long-term capital gains? Is qualified small business? Is it income because they did work? So are they getting paid an hourly rate? If these people are doing work, then you might be forced to pay them. They could sue you post because you were using their labor. It's very, very, even with this as clean as you could make it structure, there are a lot of checkboxes and issues that I think they're going to have to work on around tax treatment and how these distributions happen. I also think the Scout program, obviously super valid. I was the first to acquire Scout. Scout programs are now everywhere. So that part's valid. Consensus building is not how angel investing works. That's not how great investing works. It's not about consensus. It's about people really doing diligence and spending hours and hours, not the wisdom of crowds. So I wonder if having 1,000 people is as good as, it might be better to have just had 100 or 50 even to do this work and to just pay them cash.
It's funny because, when you read the details, it sort of sounds vaguely similar. Like if you squint, it looks a little bit like our firm and a syndicate doing a public fundraise, just with 16 other layers of complexity attached that don't seem totally necessary. And I don't 100% see the obvious benefit of the 16 layers of complexity.
Yeah, it's sort of, that's the thing that was confusing is that, I think you get a lot of deal flow from it because you have the 1,000 members and they're all YC alums. But then you have to deal with the overhead associated with that and say, and is that trade-off worth it? I think that's difficult.
Sounds like you might get too much inbound.
Yeah.
If this is going to be $80 million fund, writing 100K checks and then doing 500K follow-ons to the winners, whatever it is, they do 100K checks into 400 companies for 40 million. That's a 400. Yeah. 400. I mean, that's a lot of diligence. And then they said that these 1,300 people are going to do diligence. It's not actually how diligence works. So I'm not sure how they're defining diligence. Diligence is boring and arduous operational work. Can I see this contract? Can I see this IP assignment? Can I go check with the registrar that you are, in fact, a Delaware corporation? Do you have any lawsuits? I mean, it's something that administrative, operational people with administrative and operational excellence need to do. And it takes 10 hours. It takes 20 hours.
Diligence is actually just a very simplified view of it. It's just fact checking, right? That's all it is.
Correct.
You have a set of facts. I mean, you guys know I do Shark Tank in South Africa. I'm one of the sharks on the show. When we go, you didn't know that, Molly?
No, that is awesome.
So when we do Shark Tank, we go there, we hit like 60, 70 different pitches in 10 days, and we create a season, right? When I'm up there, what you see is 15-minute clip of what happened. It's actually an hour and a half session. And I have a notepad. I'm writing down all my notes. And the guy says my revenue is 5 million or whatever it is and blah, blah, blah. After the show, we do diligence. And all I have is a bunch of people in South Africa in my VC fund there going and doing fact checking. And they go, hey, you said your revenue was this. And, half the deals don't go through because on the show, the guy said something was, a bit of a stretch, in some cases, an outright lie. We have this contract, we have this patent. Oh, it's a patent pending. Oh, those sort of things. So all diligence is fact checking. And the only time I don't do diligence a lot in early stage because there's just no diligence. The guys, like 3 guys in the room, there's no diligence to do. It's like, here's an idea. But the moment the company moves further along, for me, it's always about the people. So if it's founders I've worked with previously that I trust, I don't need to fact check. Sunny, did I do any diligence on your company when we just did this round?
Serial founder, you don't have to. Yeah.
You don't have to. These guys know what they're doing. So the diligence process is like, the way to do this, by the way, if you want to scale this up, is you start a fund where you only invest in second or third time founders that have got a track record. And you say, look, we don't have time for diligence. So if Sunny comes or Vinny comes or someone we know comes, we'll write the check because now we can just skip the diligence because there's a trust. But when there's no trust in a low trust environment, fact checking and diligence is important. I don't know who they bring onto the show in Shark Tank. I have no idea. I've got to fact check. It wasn't a referral from Jason or Sunny or you or whatever. And that's how Silicon Valley built itself, right? Silicon Valley created this trusted network of founders and entrepreneurs. And you could trust people if, they've had an exit or they're taking money before or whatever. And through word of mouth and network, you just write checks and did angel. You cannot do that anymore. You don't like the geographic limitations of Silicon Valley have been destroyed. It's now people anywhere around the world. The guy can say, hey, I'm in San Francisco. And meanwhile, he's sitting in, Russia and you wire the money and it's gone. And you didn't know because it's all virtual. Whereas you can meet, it's very different.
So are you saying that you think this decentralized diligence process could work fine? That this kind of fact checking, you could just outsource it to these 1,300 members and companies will send the P&L. I mean, we're asking for like bank statements, P&L, credit card statements, right? Like
it's more of a compliance risk, right? If you're purporting to be a financial advisor or a fund manager and you're making investments and you don't do diligence on someone and you mess up, there's some liability and risk that you have to take into consideration. It doesn't matter as much with me as an individual. If I go lose 25, 50, $100,000 because I didn't check on the fact check on someone, that's on me. But when you're managing money for other people, there's a higher bar, and that's really the issue, right? So if you said, look, it's a trusted network, YC founders, you probably still have to do some diligence checking at that point, but it may be lighter weight, right? You just need to do the basics, and so anyway, that's just my 2 cents on it.
Mm-hmm.
Yeah, I wish them luck. I think Ben's great. I like the innovation in it. We have tried, and our syndicate is kind of close proxy to a DAO, and AngelList is kind of syndicates writ large, I think, are like the precursors to DAOs. What I don't see in any of these DAOs is an understanding of what the syndicate members want. And it turns out what the syndicate members want most is for us to do a bunch of diligence for them. They don't want to do the diligence. They want us to source the deals. They don't want to source deals. And they want us to manage the investment post the investment to make sure the founders are on track, we're getting updates, and they have every chance of success. And that if there is an opportunity to invest more in the winners, i.e. pro rata, we're there. So what I think this OrangeDAO will learn quickly is that maybe what investors want is not what they think over time. Because I have tried. I thought I got 11,000 people, Molly, in the syndicate. They're going to be incredible. We'll have them source the deals. And then it turned out our team was better at sourcing deals.
Right. Or they'll help us with diligence, right? They'll be a resource for us to lean on and
There's another problem in the VC investing world, which Jason, you probably know all too well. The best deals are the ones that there's no syndication space for because there's just no allocation. So you basically
and how do you get an allocation? It's by being a famous investor, by being a value-added investor. And
you have a selection bias, right? So the deals that you're going to get in from people sending it to you are going to be the ones that like nobody wants to back them.
We didn't talk about that. They'll get this is the thing they're going to have to watch out for is the negative signal that the non-full-time people are going to be getting the remnants of what deals haven't closed. So this is not meant to make anybody feel bad, but let's say they're the aces in the deck at Y Combinator, those get funded by the YC partners and friends of them before demo day.
Absolutely.
They never make it to demo day. The top 10, 20 companies opt out of doing demo day and they raise their funding. So that means all that's left in the deck, let's say, are kings or queens and less. I would argue all the aces and kings are gone from the deck.
Yes.
Those 8 cards are out. Now you're dealing with the other 44 cards.
Which, by the way, significantly changes the return profile, because you look at
of course,
YC, Dropbox and Airbnb and all those. If those were taken out of the portfolio, it doesn't look that good anymore, right?
Right. So if you're at demo day, I think you're playing queens and below. Doesn't mean you can't hit a set of queens. You could.
You could.
So then, what is the DAO going to get? I think the people going to the demo day, are probably going to be on equal footing with the DAO. Maybe these people are going to the alumni demo day, and that's the thing. The other thing people don't realize. This is a hack of the demo day. Before, I think it's the week before or just a couple of days before, they do the alumni demo day, then they do the regular demo day. If OrangeDAO is sending 1,300 alumni to the demo day, or even 10% of them, 130, and they're scouting them, they could front run the dentists and seed funds coming to demo day. So anyway, no conflict, no interest. This is super conflicted, and I think YC has always been and the entire game in Silicon Valley is a conflict game. If you're a part of the PayPal mafia, if you're part of the Airbnb mafia, you will get first shot at those companies if you're part of the Stanford mafia. So this is a way, I think, to get early access. These alumni, these 1,300, now that I think of it, could be on Bookface, which is the internal network for YC. They're on Bookface. They're seeing all the companies 12 weeks before demo day. Oh, I just figured it out. It took me 15 minutes.
So there's nothing like decentralized and highfalutin and philosophical about this at all.
It's just to get an edge. In that case, maybe I want to be an LP.
Now we love it. Now we're like genius.
Well, no, think about it. On book, I believe, somebody from YC can correct me if I'm wrong, but the current crop of class is put on Bookface, early in the class, not after they graduate. So if they're on Bookface and they're talking, these 1,300 alumni are getting access to them week 0 through week 12, and the public's getting access week 13. They're front running the market. This is a hack to front run the market and pay those folks off with carry. Brilliant. Love it.
I really want to see a SPAC meet DAO concept, because I feel like there's a way to use a SPAC not an actual DAO, but stay with me here.
Molly, that tells me one thing. It tells me you have not spent enough money on lawyers in your life.
That is true. I have been blessed in that way. That is 100% true. But no. Like, what if you could bundle, like, there are all these businesses, we keep saying that, this is random, I know, but stick with me, that like the worst meeting that we take is with the $40 million business as a VC, because the $40 million is a great business, but it's not investable. And I know all these people who are like, I just want to build a small business, a sustainable small business that's great for my community and the world and me and whatever, and I make a good living, but like, it's not investable in VC, and also I can't get a loan because whatever. Like, what if there was a universe in which you could bundle really great businesses into a SPAC and use the public markets to allow them to have access to capital that they can't get?
It's like a Berkshire Hathaway.
Or banks.
Like a collection of companies. Yeah. It's not a bad idea.
But use SPACs that way. Like, evolve this mechanism that could actually do really great things for companies that need capital without having to have like predatory debt or aren't venture investable.
Or we could just make a test for people to become sophisticated investors and let them invest in private companies and get the monthly updates. That's in Europe, you're allowed to. I mean, all of this is about access to deal flow. And in Europe, I think there's a website called Crowdcube. There's a couple of them over there that have done very well. They're like Seed Invest and Republic here, except you don't need to be an accredited investor. So imagine if AngelList and the Syndicate could let anybody invest. That's how it is in London, in Europe. Real companies use it, and they get early support from their local communities. And they have had small businesses on those kind of websites.
Crowdcube.
So imagine imagine you had somebody who wanted to make, I don't know, an event center, restaurant, cafe, community center, and it was going to cost $5 million to build. You could actually launch it on one of these sites, let the public pay into it, and they would have equity in it. So it could be a for-profit as opposed to a GoFundMe.
But let me comment one thing on your portfolio, Jason. I'm interested in knowing why you're so bullish on Disney. Let me preface that with saying I'm a huge Disney fan, but after Bob Iger left and Chapek took over, I think that the company is going south because I don't think he knows what he's doing. That's my personal take.
Great question. 100%. Here's what I believe. Bob Chapek is the parks guy, right? He needs to learn the other parts of the business. Of course, it's going to be, any transition is going to be bumpy. That's Bob Iger's transition. There was a lot of questions about that. He rose to the occasion. And there is a chance Chapek doesn't last. Bob Iger comes back. Who knows what's going to happen? What I believe is that one service will have 1 billion subscribers. And I believe that one service will be Disney, Hulu, ESPN. They'll have 1 billion people. It'll be the largest subscription business ever created for anything. So Verizon has over 100 million. Netflix has whatever it is, 200 million collectively. The Disney assets have over 200 million with ESPN, Hulu, all that stuff. So my bet is they will hit 1 billion, no matter who's the CEO, based on their IP collection. When they hit 1 billion, if the average is, let's say, $6, $7 globally for this, let's just say 6, you're talking about almost $100 billion in subscription fees. It's never existed in the world as a cash cow business. And so I believe there are 3 companies in the running for that. Netflix, which I still think is a little overvalued and they're kind of lost, but I almost J-traded them. I believe Warner Brothers is the other with HBO. And then I believe Disney's the number 1. So I think those are your top 3 in the category. And I wanted to bet on 2 of them. So I picked those 2.
And as a value buyer, I would be totally in your camp. I think it's a phenomenal company. At a 65 PE ratio right now, I think it's extremely overvalued. And I think I
don't worry about the PE. I worry about the top line growth.
The problem is they're not competing. If you look as a customer who's been to Disney parks and Disney cruises and whatever else,
they're sold out.
No. Actually, no. What's happening right now is this COVID paranoia with Disney is killing demand. You look at all the other cruise liners, for example, today.
Oh, I don't know about cruises, but Disney parks have been sold out since the reopening.
No. They're not sold out. They've reduced the capacity at the parks because of COVID. Everything, basically Disney's become this COVID paranoia entity where whether it's the cruise liners or the parks or whatever else, they're basically restricting the access to Disney service and creating really bad customer experiences. All my experiences so far have been terrible because I think that they've got a bunch of woohoos running around trying to if people want to walk around unvaccinated, that's their problem. Let them go in. But it's affecting the bottom line. And the other cruises are all being sold out. And Disney's cruises, which is basically one of the largest, they're basically restricting and saying vaccinated people only. And I'm vaxxed. I don't give a damn. But from a business perspective, you're finding that people are really, really complaining about the fact that Disney just thinks COVID's still an issue.
Disney's
also, you have to,
COVID.
In addition to all of that, Disney has raised its prices dramatically, right?
Yes,
aren't they? Yeah. It's so prohibitively expensive that as a discretionary purchase for fans, there is no universe in which they're abusing goodwill. Exactly.
They're losing goodwill. And I don't know how much longer the company can handle. I mean, let me tell you one thing I've known about companies in my life is between 18 and 24 months after a CEO departs is when the wheels start falling off if the new CEO is not up to task. It never happens immediately. It takes a while. And so I would wait for the 24-month mark after Iger disappears and to figure out what's going on. Because he's not even chairman anymore. I think he stepped down as chairman. So he's out of Disney totally.
Yeah, they had a big, huge public fight. Either Chapek gets nuked and Iger comes back, or Chapek is the guy, and I'm with you. I'm not sold on him at all.
Iger, the fact that
I'm not saying I don't love Iger. I would much rather Iger be in the seat.
The fact that he's fighting with Chapek means that he's seeing all the holes that we're seeing. So anyway, from the J trading portfolio, I wish you well.
You don't like it?
I think the timing is.
Remember the goal of the J trading portfolio
today. Can we just do 5x this all
in
day?
10 years? 5x.
Let's get pizza.
5x cash on cash in 10 years. That's the goal.
I'll beat you at 5x because I will go and buy Disney at, let's see, I'll buy it at 70 and I'll make it at 350 before.
I mean, you might get it at 90. I can see that happening. But when it goes into 90, I'm buying more, Vinny. I'm buying more.
Sunny's bringing us back to fundamentals here.
I think bringing back to our topic, as soon as they get into some form of crypto, like NFTs and those collections,
then you're shorting?
No, that's the time it goes to the next level.
Maybe.
Well,
look at this.
Your ticket should be
circle.
Your ticket should be an NFT.
Yes, exactly.
And the NFT should include your picture. And you should be able to take your picture and splash down to
We didn't get to it this time, guys. We should next time. I think we're going to time out here. But this proof of attendance protocol tokens are really
what is
phenomenal. That? So it's basically like if you attend an event, it could be like a concert, it could be a conference, and you're given a token associated with that. And then other activities which go on there could be advertising, things like that. You can tie back to that token. So the VCon
is it open protocol that somebody wrote?
No. It's just a notion of giving.
It's a concept.
Like imagine it's a concept. So imagine you have a conference. You give everyone a token, right? Exactly. Yeah, POAPs. And so you give everyone a token that's there. That's a proof of attendance. Think of it like Web3 Foursquare or something like that, right? And so once you're there, and then if there's other marketing activities or post loyalty things you want to do, you tie it to that. I think once Disney starts to kind of uncover this and tie it into not just proof of attendance, but proof of watching and things like that. And people are talking about NFTs they've done for Marvel, but I think they haven't even scratched the surface. I think it's incredible.
POAPs, POAPs,
Yeah.
proof of attendance.
But it's a collectible. It's like getting those little badges when you go to Disneyland. You get little like small badges worth $5.
No, I know, but they're digital, collectible, tradable, and like I did see that somebody just sold for $500,000 a full ticket to Michael Jordan's first game. They didn't go, but they happened to have the 2 full tickets sitting in their dresser or somewhere, and they found them, and that was Michael Jordan's first game in the NBA. Some maniac bought that for $500,000, Billy. I'm not sure who would have spent $500,000 on that, Billy.
I want to add one last thing. Back on the Disney rant for a sec. I just remembered another reason why I'm pissed with them. Over the
I'm in it for streaming. Don't mess with my. No, I like you banging on my J trade.
Okay, so over the summer, Sunny and I went to Hawaii. We happened to stay at 2 hotels next to each other.
Yeah.
Okay. I stayed at Aulani, which is the Disney resort, for a week, and Sunny was next door at the Four Seasons.
Yeah.
And what happened was I got service in my room every 2 days, and they would just change the towels and stuff. That's it. Okay. And we were paying an obscene amount of money, and the Four Seasons got twice a day service.
This is Vinny just trying to, look, I think again, it just comes back to there's so much opportunity upside. I'm with Jake Hell on this. I think there's so much.
You're making the J trade.
I'm not making it.
Okay, so wait. Vinny is
I'm never going back.
fading. Vinny's fading the J trade, and Sunny's following the J trade. I like it. I like it. Let's all go. Let's go. You guys, if you guys want to, you got to just start. I want to do some J trading in crypto. So next week, I want 3 choices, and I'm going to buy something next week or 2 weeks from now. I want you to each of you give me your best pitch on your best 2 ideas, and I'm going to pick the best one of the 4. Sound like a good deal?
We'll bring it to the next one. Let's do it.
Will
you each bring me 2? But you can't compare notes. And my goal is 5x. So I want a real project.
5x in 5 years.
5x in 10 years.
10 years. Oh, that's
5x
easy.
in 10 years. The market doubles every 10 years. What's that? Crypto won't be here in 10 years?
5x in like 1 year is what you look for.
No.
10x.
I don't want that.
That's what I
want something that
in 2 months.
I want to beat the market. I want this to be like a top tier venture fund, double the market, 20% IRR is kind of what I'm thinking, in my portfolio.
And then I'm going to go stay at the Aulani, and I'm going to be like, thanks for not changing my sheets every day. That's really environmentally responsible.
Hashtag first world problem. Can you believe this? This is how he's making his trade. Here's how you make your trade. Obi-Wan, Mandalorian, She-Hulk, Little Mermaid with a diverse cast making thousands of young women of color cry on their TikToks. They know what they're doing. They're doing a Little Mermaid with a person of color.
I don't disagree, Jason. I just think that in the short term,
stuck on the hotel. Why are you staying there? Be like Jake Howe and go to the Amman Hotel. Come on, guys. Shoot the locks off your wallet. Spend some of that Bitcoin. Go to the Amman Hotel.
Come on.
That's it. We're done. A great episode. Everybody, please, let's get them some plugs, Molly, as we wrap this up.
Yep. Amazing. Where can everybody find you? Sunny, you start.
Definitive.io. We're doing a lot of interesting things. Blockchain intelligence, reach out, blockchain growth, Web3 growth. So
what is it, 50K a year? How much that cost?
It is. Yeah, 50K a year.
50K a year. I need at least one person to sign up every time. That's the cost of having Sunny here.
And you can find me on Twitter at Vinny Lingham, and obviously waitroom.com, waitroom.com, and fun stuff coming there. Thanks, guys. This has been fun.
All right, we'll see you next time. You guys can drop off.
See you next time.